Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries of corporate filings and try to find some actual juice. Today we're diving into Lake Superior Acquisition Corp. And let's just say this report is a bit of a puzzle. Before we jump in, if you like getting the real story behind the numbers without all the corporate jargon, make sure you hit that subscribe button and join our community. We've also got a Discord channel linked in the description where we break down more of these filings. Alright, so this is a Form 8K filed by Lake Superior Acquisition Corp, which is a special purpose acquisition company or SPAC. Think of these as companies that go public with the sole purpose of merging with another company. So the big news here is they are announcing a definitive business combination agreement with Openmarkets Group TI Limited and BMyG OMG Pti Limited. Essentially, Lake Superior is merging with Openmarkets. Now this filing also gives us a rundown of their registered securities. They have these units referred to as LK SPU, which are made up of one Class A ordinary share and 1/7 of a right. Then you have the Class A ordinary shares themselves traded under LKSP and the rights traded under LKSPR. All of these are listed on the Nasdaq Stock Market LLC, which is a pretty standard exchange for companies like this. It is important to note that securities registered pursuant to Section 12B of the Act none are listed here, which sounds technical but essentially means they don't have specific securities registered under that particular section. Lake Superior Acquisition Corp is checking the box as an emerging growth company. This is a designation that allows them to use certain regulatory flexibilities for a period of time. They have also elected not to use the extended transition period for complying with any new or revised financial accounting standards, which means they are pretty much on the same timeline as larger established companies when it comes to new accounting rules. The real meat of this report kicks off with Item 7.01 Regulation FD Disclosure. This is where they announce the big news, the definitive business combination agreement. So Lake Superior, the SPAC, is combining with Openmarkets, a company that provides trading and wealth management technology. This is a pretty significant step for both companies. For Openmarkets, this is their ticket to becoming a publicly traded company. Now this section gets into the nitty-gritty of what this merger means for investors. They are clearly stating that this report is not an offer to sell or buy any securities. Instead, they are letting everyone know that they will be filing a registration statement on Form F-4. This document will contain important information for shareholders, including a preliminary proxy statement and prospectus. They are really urging investors to read this registration statement carefully once it becomes available because it will have all the crucial details about the proposed transactions. They are also pointing investors to the SEC website, which is www.sec.gov, for free access to these documents. This part is a heads up about who might be involved in asking for shareholder votes. Lake Superior Openmarkets and the other parties involved, their directors and executives, could be considered participants in asking for proxies from Lake Superior shareholders. They mention that more information about these individuals and their interests will be included in the proxy statement. This is standard disclosure to ensure transparency about who is influencing shareholder decisions. This is a really important section for understanding the risks involved. The company is including a lot of forward-looking statements here. These are essentially educated guesses about the future performance and outcomes of the business combination. They use words like believe, project, expect, and anticipate. These statements are based on current management expectations, but they are also subject to a lot of risks and uncertainties. They list out quite a few potential challenges that could prevent the deal from going through or affect the future results. This includes things like the risk of terminating negotiations, the outcome of legal proceedings, the inability to get shareholder or regulatory approval, and changes to the deal structure. They also touch on the ability to meet stock exchange listing standards and the potential disruption to current plans and operations. A big one is the ability to recognize the anticipated benefits of the transaction, which they say could be affected by competition and Openmarkets' ability to grow profitably and retain key employees. They also mention costs related to the proposed transactions and changes in applicable laws or regulations. It is crucial to understand that these are not guarantees and many factors could cause actual results to differ materially from these forward-looking statements. They even suggest looking at Lake Superior's initial public offering prospectus for more details on these risks. This statement is a reiteration that this communication is not an offer to sell or buy any securities. It is a legal disclaimer to make sure everyone understands that this is informational and not a sales pitch. They emphasize that no offer of securities will be made except through a proper prospectus meeting the requirements of the Securities Act of 1933. They also make it clear that no regulatory authority has approved the offering or endorsed the accuracy of the information. This is the last part of the filing, and it simply lists the exhibits included. The most important one here is Exhibit 99.1, which is the press release dated the 23rd of January 2026, announcing the business combination. They also include Exhibit 104, which is the cover page interactive data file. So what does this all mean? At its core, this is a SPAC announcing its target for a merger. Lake Superior Acquisition Corp is giving Openmarkets a path to go public. We don't have specific financial tables from Openmarkets in this particular 8K filing, which is a bit of a missed opportunity for us as investors wanting to see the numbers up front. Most of the information here is about the deal structure and the process going forward. The big takeaway is that a SPAC deal is happening. We need to keep an eye out for the Form F-4 filing because that is where we'll get the detailed financial information and projections for Openmarkets. The risks highlighted in the forward-looking statement section are significant, and investors should pay close attention to those as this deal progresses. The success of this merger will largely depend on whether Openmarkets can deliver on its growth potential and profitability as described in their future filings. For now, this is really just the announcement of the intention to merge, and we're waiting for the deeper dive into the financials. Alright, that is our quick decode of this 8K filing. What is your take on this SPAC merger with Openmarkets? Do you think it is a smart move for both companies? Drop your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more. And don't forget to join our Discord community linked in the description for more insights. Thanks for watching. See you next time.